when we look at that prices paid index in particular, is there a sense among manufacturers that we are reaching peak price pressure, or do they expect that to persist?
Well, so we increased our growth in January compared to December. But I think what you really had going on is you had a whole bunch of new prices going into place in January. So these prices were essentially set back in the October-November timeframe. They were implemented in January. So I think that's why you're seeing that number step up. But I think you're going to see it kind of relax as we go into February, March. I'm not overly concerned about the pricing number. I think, the interesting thing, the story of the month. Oh, I'm sorry. Go ahead, Guy.
Tim, carry on. Carry on.
Yeah, I think the story of the month is really Omicron and the high excessive absenteeism that has also caused a lot more early retirements than we've had in the last 4 or 5 months. And I think that's why you saw the production number not pop as much as we wanted to, and also the new order number not get above 60. But, overall, you look at what's happened here in January, and we've had some pretty good performance in spite of all the headwinds that we have. And I think we're in a pretty good position here for the rest of the quarter.
What about further on from that? There is this concern growing, Tim, that we're going to see some sort of a growth shock potentially later on this year after we've seen the Fed tightening. Just in terms of the momentum that we have right now, how sustainable do you think it is?
Well, I think it's strong. If you look, the employment number gained again. That doesn't actually mean employment on the factory floor for the month of January, but that bodes really well for the future. I think our supplier delivery number most likely should have went way up in the month of January. I expect that it's probably going to go up in February as a carryover from the January absenteeism. I mean, we heard reports of 15, 20% absenteeism in January. That's incredible that we were able to really produce as much as we did produce, given all the unplanned absenteeisms from Omicron. The good thing about it was that the people who were absent weren't out for long compared to what we saw back in Delta and prior to that. So, I think we're off to a good start here. And we've run an excessively long period of time here over 60. If you look back over the last 20 years, we have never run that long over 60, significantly longer. So I think we're now going to, we're settling in, as I mentioned last month, 57, 59 and a half. That's good performance. Month over month expansion of the manufacturing economy at a 57 to 59 is really good. So, I think we've probably now dropped below that 60 number, absent some massive shock that would impact the supplier delivery number. But I think we're in a good position as we start the year.
Tim, you talk about the Omicron variant and the impact it has on the employee picture and absenteeism. What about China in particular and the COVID zero policy and how that could impact supply chains for some of these companies?
Well, that's for sure concerning. But China's been running at a PMI of somewhere around 50 to 52 for the last year and a half. They've been very sluggish. I think, the biggest concern here now for the U.S. is we're in that pre-Lunar New Year bulge that comes into the ports in January. Lunar New Year started today. Hoping that for the next 3 or 4 weeks, as we get the final boats coming in, that we'll be able to burn off some of that backlog. I'm not so sure anymore, especially given the fact that we've got potential labor issues on the West Coast ports in the summertime. So, we're still struggling here with port congestion. We did have some positive indicators on the transportation side in the month of January that it is a little bit better than December. I wouldn't call it a victory yet at this point, but both the transportation sector and the labor sector and the supply chain sector, we had indications that things were better than December.
Just picking up on that and figuring out where companies are with their inventory, what are you seeing if we are going to see a continued issue when it comes to the ports, when it comes to China, when it comes to shipping? What do inventories look like, Tim, in terms of the robustness of these businesses to keep going through these difficult phases?
Yeah, I think that remains to be seen, but I do expect the manufacturing inventory number to pop back up in February and March. I think we had some carryover effects here from end of year December that kept the inventory number low. I think we're going to get back into the 55, 56 level. So, you stay running at a 58 new order level, you get production above 60. Now that you got the labor reporting back to the workforce, you gain 1 or 2 points a month on employment. Supplier deliveries hang at 65 to 63. Inventory gets to 54, 55. And, you're in that 59 range for the foreseeable future.